Hello, everyone. How are you doing? Trust your day has been fine. If you're watching this recording in the evening, so how was your day? And I hope your day went well. You're watching this in the morning. How was your night? Okay, so first of all, let me congratulate you. You have made it to the last video for this phase. Okay, so the phase one STF study channel. This is the last video you will be watching in this phase. And I want to ask you, how has it been? How has it been? Has it been worth your money? So, how has it been? Yep. So, I mean, the journey has been fine for me also. Uh, I mean, I enjoyed it. So, yeah, I hope it was educative for you. I hope you've learned quite a number of stuff, and I hope you've started looking at the charts, you started looking at the markets, you started marking up the charts, and all of that. So, yes, this is the last video. And as you can see to the upper left of my screen, I'm sure you guys are used to that already. Right, we will be looking at, this is video 21. We will be looking at how to mark up a trading chart before executing a trade on MetaTrader 4. And then we will be looking at identifying buying and selling opportunities. That's it. Simple two stuff. How to mark up a trading chart before executing a trade on a MetaTrader 4 application, and then identifying buying and selling opportunities in the market. That's it. So before we proceed, all right, if you look to the right, just take your eye to the right, you will see the list of videos. So this is the list of video I was working with while I was making the course, right? I only used to take a fraction of it and then I would put it, then I would zoom it out for you guys to see, zoom in so you guys can see anytime I'm making a video. But this is the complete list of video PDF file, which I'm sure you have. It's in the phase one group, right? So we started this call by, as in we started this phase with video one uh, that was talking about introductory video, a little bit of who I am, and then some applications you will need, and then joining some groups and opening account. So in the applications needed, first I started with who I am, right? So I'm sure you know who I am now. And definitely, I'm sure from the whole 20 videos you have watched, you can tell one thing, that he is a good teacher. So if you don't give me that credit, I'm gonna give myself that credit. So yeah, I know how to pass knowledge. Very good at it. Definitely. So yes, a little bit of introduction about me. And then I moved on to showing you some applications you will need, which by now I'm sure you're used to already, right? The MetaTrader 4, the Zoom, Telegram, and all of that. So you have that, and I'm sure you're making use of them already. And then I also said joining groups and account opening. So joining groups has to do with you joining um, Telegram or having a Telegram account. So I mean, you know all the stuff, right? That's it. And then video two, we talked about money. What is money? Why is money important? What are the ways to get money? And money is a best friend belief principle. Now, I mean, money is our best friend belief principle is something that is, I want you to keep having the belief that money is not something that is hard to get. Once you set your mind to it, definitely it will come. And you have to put in the work, right? So it will come, but then you just have to put in the work. So, and then we talked about what are your beliefs about money? How do you see money? And then some homework exercise I was given to you was write down and send to me your own 3 new beliefs about money. So if you've not done this video, if you've not done this assignment, uh, I mean, there's no way I would even attend to your next assignment. So I'm sure you've done this already. So video three, what is the markets? What do people do in the marketplace? Is market important in our society today? Very, very important. And then I explained to you the types of markets and their importance. And then we went to video 4. We talked about what is trading. Is trading related to the marketplace? Is it important to have money in order to be able to trade? I mean, what's the answer? I gave you that in video 4. And then how does trading take place in a marketplace? So I explained to you how trading takes place in a marketplace. So now video 5 talks about Forex. What is Forex? What is Forex trading? How do we participate in the Forex market? Can everybody participate in the financial market? So that's another thing we talked about. And then video 6, we talked about currency, right? And then I explained to you what are currency exchange rates, and then how do we trade currencies? What is a peep? How do we calculate peeps? And then I gave you an homework exercise on baby peeps. And I remember that in before video 16, I also talked about leverage, right? So I explained pipet, lot, and then I explained what a leverage is to you, right? The leverage gives you the ability to have more buying power in the market. And then video 7 talked about what is the Forex market, what are the different types of Forex market analysis. That's the fundamental analysis, sentiment. I don't know if it's sentiment or sentimental, so maybe I might be a little bit wrong there. I'm not sure, but you have the idea of what I'm talking about. Sentiment. I'm just going to call it sentimental analysis. I might be wrong, but that's it. And then we have technical analysis. I explained to you the three different, what they mean. But fundamental has to do with we looking at economic activities, looking at news that is coming out, and then using that to predict what is going to happen to the dollar to particular currency you want to trade, right? So what is the central bank doing basically? So if we want to look at fundamental analysis as regards to a particular currency we want to trade, currency pair, most of the things we're going to be looking at is what is the central bank of that country doing, right? Like let's say United States, for example, now the Federal Reserve at one, that's the Federal Reserve, that's the Bank of United States, right? So they are in charge of determining monetary policy, inflation rates, all of those things. So how they react or how the decisions they make tend to affect the markets directly, right? So we look at those things and then we use that to determine what's going to happen to a particular currency. That's fundamental analysis. And then technical analysis, like I said, it's a study of past price action in order to predict what is going to happen in the future. So in order for you to be a good technical analyst, one of the most important tools you should have is being able to read the chart. And I would say having a trading view account. That's it. You need to have a trading view account. Now, I'm not saying it should be paid, or you need to definitely have a trading view account because it's going to help you the data on TradingView is going to show you what has happened in the past, and then you can use those findings to predict what is going to happen in the future. So in order for you to be a good technical analyst, I'm going to say it again, you need to have a TradingView account. I know some people can trade directly from their MetaTrader, right? But then I think TradingView is the best for me. And then video 8, we looked at introduction to trading charts, understanding and TradingView websites, and making your trading chart like mine. So I want to ask you this funny question. So do you still have your chart black and white? Or you've changed the color, right? So maybe along the line you felt you needed to change the color to just have something that resonates with you. So it's okay if you change the color. The most important thing is you understand what you're doing, right? So yes, so we talked about TradingView. I explained to you what TradingView is, and then I showed you a couple of things, tools, and how to navigate the TradingView website. And at video 9, we talked about introduction to trading candle. What is a buy candle? What is a sell candle? What other names can we call these candles? So what other names can we call this candle? Pause the video now and let me see if you remember. So I'm going to assume you remember, right? They call a buy candle a bullish candle, or a bull candle, and a sell candle a bearish candle, or a bear candle. And then video 10, we talked about platforms for trading, how to use the MetaTrader 4 application. Excuse me, sorry. Okay, so how to use the MetaTrader 4 application. What is market execution? What is a buy limit, sell limit? What is a buy stop, sell stop? How to read and understand a sell, buy and sell position too. So I remember this video. I took you through quite a journey. All right, so I hope you watched it. I hope you have an understanding of what these things are now. So video 11, introduction to market structure. What are the types of market structure? What is a break of structure? And what is a transition phase in the market? So I hope you remember what a market structure is. The three types of market structure: up trading, down trading, and consolidation markets. So yes, and then transition phase when the market is changing from one direction to another. And then we talked about risk management. Very, very important also. Why managing risk is important. And I gave you my risk management model and its advantage. So I hope you remember that. And I hope you have been using it. And I want you to continue to use it. Okay, that's it. Now, video 13 talked about smart money. And then I told you, do people control the Forex market and guidelines on how to trade like smart money? That was in video 13. I gave you the checklist. I explained to you who's smart money, who they are, right? And why we call them smart money and why we have a trading checklist that kind of aligns with how the institutions are trading. Now, a little thing I want to add to this video 13 is that now, if we now basically what we teach or what I've taught you about smart money doesn't quote unquote means this is exactly how the big banks or how the institutions trade. Okay, it's just a way of, how do I put it now? It's just this is not like directly one of like this is like what's the word now? Like this is not how the banks trade, quote unquote. Okay, but if you look at smart money concept and the kind of entries we get in the market, like we get entries with very low drawdown. We get sniper entries. We have 15 pip stop losses, 10 pip stop losses. These are kind of institutional entries, right? Like you get like you knowing that the price is going to reject from here, not getting in on a trade and having to experience series of drawdown that would last a couple of hours, days, and then price start going in your way and having 100 pip stop losses, 150 pip, 200 pip stop losses, right? So when we say trading like the institution, smart money kind of trading is because we have this little stop loss, 15 pip stop loss, 10 pip stop loss, 5 pip stop loss, and we catch sniper entries and then price go in our way. And each of these concepts I've taught you, the institutional candle, the three types of institutional candle, gives you an idea that seeing how price reject from there, quote unquote, the institutions may also be looking to take a buy position from there. Because remember, I told you that we do not move price. The institutions are the one responsible for price movement on the chart. So if price gets to an imbalance and price rejects from an imbalance, that's an institutional entry because you knew it was going to happen and then price rejected from there. The institutions took price up from there and you got in also. That's smart money way of trading. So are you seeing it now? So smart money concept, the concept I've taught you, it is not quote unquote directly how the institutions are trading because I don't know how they're trading. And some of the podcasts I've been opportune to watch from guys that actually worked in this, institutions. They said I've forgotten his name now. He said, this is not how the institutions trade, that institutions do not trade using smart money concepts. You understand? I mean, I was surprised when I heard that, but I could understand what he was saying, right? And then one of the things they said was that, like the guys in the trading floor, they just trade based on what was given to them. So they just come in and press buttons. They just come in and say, okay, today I'm just going to buy. Like they're following a script to trade, right? So it's not like they're trading with their own strategy or something. Right. So I just want you to understand that this is not how the institutions trade, like you've caught how they trade. Understand? But the idea around smart money is that you are getting in just like how the institutions will get in. I hope you understand what I'm trying to say now. So yes, that's it. That's the idea around smart money concept. And then video 14, we started to talk about the checklist, right? Introduction to market range, and introduction to market trend, and then importance of having a market range. And then video 15, introduction to liquidity, very important. Is liquidity important in the Forex market? What are the forms of liquidity? I told you what the forms are, right? I've explained to you. We have two forms of liquidity, which are the static and dynamic. We have two types of liquidity, which is internal and external. And then I gave you an homework exercise. And in video 16, we talked about institutional candle, mitigation candle, how to spot a mitigation candle, how to trade a mitigation candle. And then video 17, we talked about imbalance, how to spot it and how to trade it. Video 18, we talked about smart money cube, how to spot it and how to trade it. And in video 19, we talked about the Fibonacci tool, the importance of the Fibonacci tool, and I explained to you what discount, premium, and extension zones are in the market. And then video 20, which is the video you watched before this, I took my time to really go into demand and supply, and I explained to you what demand and supply means in a market, and then identifying demand and supply zones in the market and how to trade demand and supply zones using the Quasimodo pattern. That's it. And then today, video 21, which is this video you're watching now, I'm going to be explaining to you how to mark up a trading chart before executing a trade on the MetaTrader 4, and then identifying buying and selling opportunities. So with that being said, I'm going to take this off now. All right, so how to mark up a trading chart. Now, from all the things you've learned from me so far, how do you think you should approach a chart? I mean, if you are still waiting for me now on this call now, like what I just said now, you don't have an idea, then I think you need to go back to watch all the video again. By now, you should definitely know how to mark up a trading chart before executing a trade. That's it. You should know how to do it by now. If you watch the video accordingly, if you did the homework exercises accordingly, you should be able to mark up a trading chart now. That's it. So now, how do you mark up a trading chart? That's it. So now I'm looking at a particular asset, and any asset now, you're looking at a particular asset. You just open up the TradingView website and you check a particular currency pair. Now, how do you know if that pair is a buying? It's going to give you how do you know that? How do you know if that pair is presenting to you a buying opportunity or a selling opportunity? That's it. How do you know? What do you think is the first thing that will come to your mind that tells you that this is a buying opportunity? Or I'm supposed to be looking for buying opportunity in this trade, in this currency pair. That takes us back to the first checklist, which is the market trend. If the market is bullish, that sets us up for a buying opportunity. If the market is bearish, that sets us up for a selling opportunity. It's that simple. Don't think I'm coming here to give you something new. Okay, it's something you know already. That's it. That's it. If the market is bullish, I want to buy. If the market is bearish, I want to sell. It's that simple, fam. That's it. So now, after knowing that the market is bullish, what next do you do? Okay, the checklist number 2 says the range. But actually, there is something we call directional bias, which you will be learning in, I think, phase 2 or phase 3. Can't remember where it is again. I think maybe ending of phase 2 or so, of phase 3. You will be learning something I call directional bias. Now, directional bias simply means what has been the order flow. You already have an idea of what it is. Don't think it's something, oh, coach has said something new. No. Directional bias simply means what has price been doing over time? Higher highs, higher lows, higher highs, higher lows. That's a directional bias. That's a bullish directional bias. But now, the way we look at it, the more advanced way is that in as much as the first thing we want to look out for is the structure of the market, but there is something actually I always do before even considering the structure. I try to look at what liquidity, because the market is attracted to areas of liquidity. That's it. So what can make a bullish market change to become bearish and start to sell down? Liquidity. What can make a bearish market turn and start going back up? Liquidity. So I like to spot liquidity first before even looking out for the structure of the market. Because when I see the liquidity, I then wait for structure to align. Okay. Now, if you remember, liquidity is checklist number what? Checklist number one checklist is the trend. Number two is the range. Number three is the fib. Number four is liquidity, if I remember clearly. Yeah, I think so. 1, 2, 3, 4. Yeah. So checklist number four is liquidity. But that checklist number four liquidity I'm telling you about is the liquidity you want to join the institutions to capture. That's the liquidity you mark out that this is the liquidity I'm going for. That liquidity also is what I look at for first. So when I open up a chart, I'm looking for the liquidity. Where is the equal lows? Where is the equal highs? That is what my eyes is looking out for first when I open up the chart. So I open up the chart, I'm looking for the liquidity, I'm searching for it. Once I see the equal lows, then I know, okay, all I have to do now is to wait and let structure aligns. Let me see the structure, because the structure will then give me the range. Then the range will let me be able to draw my fib. And then the fib will now be able to give me where I'm going to be buying at discount. And then when I get where I'm buying at discount, I can now be able to look for the institutional candles I have taught you. You see, it is all related now. But then what engineered all of this is the presence of liquidity I have spotted already. So yes, the liquidity is checklist number four, but now it should be number one and also number four. Meaning when you open up the chart, first mark out the equal lows and the equal highs. It doesn't have to be equal, equal, equal. What I'm saying is it doesn't have to be completely equal, equal. Like it doesn't have to be like price reject from here. It doesn't have to be price reject from here and price reject from here and give you this perfect equal highs. Okay, it can be like this and someone can be like this. This is still equal highs to me. This is still liquidity to me here. Okay, but as long as it is not one year and then one down here. So now this is not liquidity. But once this high are closer to each other, that's a liquidity for me already. Not this one that is here and then this one is way down here. Okay, exactly. That's it. So I'm looking out for the liquidity first. I'm looking at the liquidity. I'm looking out for it. When I see it, I know that I have a trade idea already. Then the next thing I want to do is wait for structure. Let it align in the direction where I want to take the liquidity. So if the liquidity is to the downside, I want to see structure break to the downside. I want to see a bearish momentum that's going to give me a telltale sign that institutions want to come for this liquidity. That's it. Liquidity is very important in the market. Because according to what I think High City said, I think I showed you guys when we were doing the liquidity video, that liquidity is the lifeblood of the market. I think that was how I put it. I can't remember. Yes, that it is needed for the market to move. So, and just like, I was opportune also to attend some markets. Was it markets? I can't remember what name the title of the program was, but then two guys were talking and from US, and they were like, when the institutions want to get in on trade, they do not get in with all their positions. So the institutions don't just buy with all their positions in at once. That's it. They don't go in with all their position once. And when I mean position, I'm talking about very big lot sizes, right? Big amount of money they want to use to trade. They won't just go in once. They go in bit by bit, bit by bit, bit by bit. So they need areas of liquidity in order for them to be able to get in the market. That's what I believe, right? So that's why and since the institutions are the one responsible for price movement, therefore liquidity is going to be essential in planning, in executing their trade. That's why the institutions like areas of liquidity. Exactly. So now when I see the liquidity, I then wait for structure to align, and then I know now if it's going to be a buying opportunity or a selling opportunity. That's it. So now I know if the liquidity is above, I'm setting up myself for a buy opportunity. All I have to do now is wait, and then let structure aligns. And the structure starts to give me some bullish momentum. That's good. I know I should now be on the lookout for buys. And then how do I mark up a trading chart before executing a trade on MetaTrader 4? I'm going to give you an example now. So let us go to, just going to use one example. I have one of the trades I've played in the past to just make this quite fast. This is the last call. I want to give you time to celebrate. Okay. Yeah, I want to give you time to celebrate. Um, Let me see. Let me see. Use no Euro JPY. Yeah, one very good example will be Euro JPY because this trade played out amazingly well, right? So yeah, this is Euro JPY. I'm just gonna remove all of this. Okay, now let's go to the 1 hour time frame. Okay, so I'm gonna use this to explain to you how to mark up a trading chart before executing on the MetaTrader 4. So I'm gonna walk you through how I do it. Okay, now let's go back to the daily time frame. Like I said, I start my analysis from the daily time frame. Okay. Now, I remember when because this video, if you check the market overview series I do on YouTube, that's the market overview. Just check anything between when this was Friday, 28th July. I think I did the video on 29th of July or so, either 29 will be Sunday or Monday. Either that Sunday or Monday, I did a market overview video and I explained Euro JPY. I remember clearly, and I said that I want to see Euro JPY continue to buy to the upside because of what the presence of equal highs. This is money in this area here. Okay, and I said Euro JPY should continue going to the upside. So that is me establishing what a directional bias. Okay, establishing a directional bias, Euro JPY, I want to see it go to the upside. And then going into the week, I remember also if you watch the video, I think maybe Charles uploaded it or so. The London session calls, we do have the pre-London session calls. I was on the call. I think the call should be probably on Tuesday, pre-London session call hosted by Charles. I said I wanted Euro JPY to come down into the imbalance. That is where I want to see price reject from. That's it. I said it in as much as I first called it out higher pricing on Sunday. And then I said, going into the week, I wanted to see price come into the imbalance. You know what imbalance is by now. Then I want to see price reject all the way to the upside. So I'd already gotten what my directional buyers ready. So now I'm looking for what higher pricing price to go to the upside. That's it. Now, let us now look at, so now I have a directional bias. That is the structure. I still want to see it go up. Right now, let us now look at the structure of the market. What has been happening to Euro JPY for a long time? It is clear that Euro JPY has been going to the upside. This is very, very clear. You can all see that Euro JPY is going to the upside. Now, coming to this area now, because we want to start looking for marking our checklist now, right? So for every trade, I have a checklist. I have the same checklist, you mark it. Okay, so now what is the trend of the market? Definitely the market is bullish. Give us this higher high here. Give us this higher low. Is this a higher high? Let us confirm if this is a higher high, right? We look for the highest high, which is this. That's the body. And then we draw to the front. There was no candle close above. So this is not a higher high. Okay, by now you should understand this. Okay, so this is not a higher high. And this is still the higher low here. And then price went all the way up to give us the higher high in this area here. Exactly. So price gave us this higher high. So we do have this now. Higher high, higher low, higher high. Price came down to give us higher low. They did create a higher high. Again, let's see. We draw this line. This is the line that gave the higher high up here. This came up, but you can see closed below. So this is not a higher high. So it just came up and then came back down the more and then gave us the higher low here. And now went to give us what? A higher high in this area. So in terms of market structure now, we do have this as higher high, higher low, higher high. And then it came down, created liquidity, and then it came down the more. Structure is still bullish. Therefore, I would be looking for buying opportunity. Are you seeing it now? So I'm in line with structure. The next thing is going to be the trading range. Now, this is the range down here, and we have this as the range coming. We have this range up here. Okay, we do have the range up here. Now we take the fib. Remember, we have a range in our checklist number 2 marked. Number 3 is what the Fibonacci tool. I'm going to measure from the swing low, and I'm going to take price all the way to the upside here, and I'm going to drag to the front. Now, this is the whole range. Now, remember that if we are buying, we want to buy a discount, and discount, like I taught you, is anything from 50% and below. That's where I want to be looking for what a buying opportunity. Okay, now C price came down below 50%. That is okay for a buy. It doesn't have to get to 618. It is not compulsory. It gets to 71, 78, 86. It can get there, but not compulsory. As soon as price can get to equilibrium, that's it. 50% is enough for discount to start buying up. And that was what happened here. Now, price came all the way down here, and then price started to go up. Remember, I already have a bias that I want to see price go up. Okay, I want to see price go to the upside. That's my bias already. So now I'm beginning to align the checklist with my bias. Checklist number 1, trend bullish. 2, range present. 3, Fibonacci, 50%. Price has given us 50% discount entry. That is checklist number 3 met. Number 4 is the liquidity. Where are you looking to take price to? I can see the equal highs. Remember, we've established that already from the beginning. I'm saying it again. This equal highs up here. We do have this equal highs up here. So this area here is going to be our top range here. And this area down here is going to be our down range. Yeah, exactly. We already have 50% entry. Price started to go up. So now look at this. Now 50% entry, that's the Fibonacci. 3, 4, liquidity. 5 is institutional candle. Now, institutional candle is divided into 3, like I explained to you. Number 1, mitigation candle, candle that sweeps liquidity. Number 2, rather, imbalance, candle that creates the imbalance. And number 3 is the institutional cube. Right? In this case now, we could have played this imbalance here. This was one imbalance that was here, but this imbalance was above 50%. I'm going to draw the fib again. Okay, from swing low to the swing high now. We're only going to be looking for what institutional candle inside the discount area. This is inside. Part of the imbalance was inside 50%. That's also okay. Now, the second imbalance, if you can see it, let me show you this. Let me just pull this a little bit to the front. There was an imbalance in this kind from this area here to this area here. There was a little imbalance here. Are you surprised seeing price come down to that area and then price reject? We also had another one here. You can see there's another one here at the 618. There's even another one here at 886. So you can see, right? But now, how do we now know which of the imbalances the institutions will play? Now, if we had our what demand supply, taught you demand and supply, right? We had what some level of supply in this area. Price came there close to it, but dropped, and then price broke out to the upside. Price came back down there, and then price started to project heavily to the upside. Gave us 3 straight days of buy. So now price has gone all the way to the upside now. Now, since price has given us a 50% entry, there's a positive, um, there is a chance that price may not come back down again. So how do I join this trade now? Now I'm seeing this now, and price created on this Friday, price created what this bullish candle. Then on Monday, price created a bullish candle. On Tuesday, price created a bullish candle. Now 3 bullish candle, I can see what an imbalance there. You see this imbalance? This is an imbalance in price. So like I told them on the call, I want price to come back there before even getting to this liquidity. I want price to come back into that imbalance. And then that is where I want to look for the buy since I missed it down here. Okay, now I went down to the 1 hour time frame. Okay, I went down to the 1 hour time frame and look at what I saw on the 1 hour time frame. Now, price first, I marked out the what demand structure area, and see this is a demand level, supply and demand. So price came there. I think I showed you this screenshot before it played out on the call video 20. So price came there. Well, now price came into my word. That imbalance I marked that was what? Was from where? The daily time frame. So that is a higher time frame. Remember, I don't want to take my trade on the higher time frame. So what I did was just mark out that imbalance, and then I'm going to wait for price. Okay, I'm going to wait for price on a much more smaller time frame. So I want price to come into that imbalance, and then I would go down time frame from daily, and I went down to 1 hour. Price is now inside that area. Now that is where I want to look for buying opportunity. That means everything I have to do all the checklist again because now I'm on a lower time frame. Are you catching it now? Lower time frame inside a point of interest from a higher time frame. That's the daily imbalance. Now price came into the imbalance here. Now going to the 30 minutes, this is the daily imbalance. I saw this now. Price came into the imbalance, right? This is the daily imbalance. And look at what happened. Then I started to see structure, right? Lower low, lower high, lower low. And then price broke the structure here, right? Higher high. Now look at this. Higher low, and then price gave a higher high. Okay? Price gave a higher high. Even if we look at it well, this is the higher high here, higher low. Price gave us this higher high, gave us this higher low, and then gave us this higher high. Now price broke the structure to the downside, right? But now the entry was based off this imbalance, number one, and then the idea that price could potentially sweep this internal liquidity. I've taught you on internal liquidity, right? Price could potentially sweep this liquidity, activate us, and then go all the way to the upside. That's it. And if you are not sure about it, maybe you wanted to wait in order to be more sure. Look at this. When price broke the structure, gave us this low, gave us this high, and then gave us this lower low. What happened again? Price broke again to the upside. And the price broke again, gave us this higher high. So if we are to bring all the checklist again, what is the trend of this market presently now? Bullish marked. Where is the range? Down range, top range, mark. Fibonacci, if we draw our fib from the swing low all the way to the swing high here. Also, where do we want to buy? We have our fib now, mark. Then the next thing is what? The liquidity. That's it. See, the liquidity. We have a liquidity we want to capture. Remember that daily liquidity up. Exactly. And also, we also had some other liquidity, like this high could be a liquidity. This equal highs here could be a liquidity. Exactly. So there were other liquidity even before getting to this bigger one up here. Now, we have our liquidity. We're going to mark that as check. After that, what is the next thing? The next thing now is the institutional candle. Now, in this area, can you see this imbalance here? that could potentially be an entry. And also, these two candles, consecutive candles, swept this liquidity that is here. This candle is a mitigation candle, I believe. Let's scale down to the 1 hour and see. Exactly. So this candle is a mitigation candle on the 1 hour. So if you were to play your mitigation entry, you also had your entry to take price all the way to the upside. Did you see it? If you gotten in there, you would have held this trade and take your final profit at the daily liquidity up. So this is how to mark up a trading chart. You look at all those things, and then the last thing you do is you just set your limits after doing it on TradingView. Then you go to your MT4 and get in Euro JPY, buy limit, calculate your lot size, and then put in the price 155,820, stop loss 155,550. Your first TP, you can just put your first TP at 30 times what you're risking, or if you want to do it manually like I do it at times, I'm just going to put my overall TP at this high. And then when it gets to 1 to 3, I can maybe close some positions because I feel it's still going to go up, right? And then wait to take the whole profit, okay, on this whole move up. So that is how to identify a buying opportunity. How do you identify a buying opportunity or selling opportunity? The first thing, the very first thing is the liquidity. Look out for the liquidity. That sets you up for a trade idea already. And then wait for the other things to align to checklist, which you know already, and you are good to go. So like I said, I do not want to make this call long because I want you to celebrate yourself for seeing this to the end. This is the end of video. This is the end of phase one, and I'm excited about it. I hope you are too, and I hope you've learned and you're ready to start taking your own trades, because the essence of all this is for you to be able to mark up your own trade, be able to mark up your own charts, and be able to take your own trade. Now, one thing with STF is, in as much as I've had people with personal success that come to my DM and say, Coach, I'm grateful for learning under you. I've been able to take care of myself, been able to take care of my family, I've been able to pay my debt, been able to do this and this with money. Some other people also have been able to start up their academy after taking up my course. Quite a number of them. Quite a number of them. Philip, um, Godfrey, um, Fortman, God Savant, just quite a number of them actually. And I mean, it's good to pass the knowledge on to others. So I would appreciate what you're doing. It's good. All right. So what's it going to be for you? That's the question now. That's what I'm asking you. What's it going to be for you? Are you just going to trade and and just make your own money? Or you want to start passing the knowledge on to others? So, I mean, don't try to answer that now, obviously. Just let it flow. Just be in the flow. That's what I would say. Be in the flow. Okay. Be in the flow. But then one thing I want to say to you is that make it work for you, or see it work for you first before you go ahead to start a mentorship group or mentorship channel or anything. Just make sure it works for you first. That's it. Make sure it works for you first. See the result first before passing it to others. Okay, so enough of the motivational speech. This is the end of phase one. Please let me know how you feel. Okay, let me know how you feel. Whew, I've done a good job. So, with that being said, you have an amazing day. Make sure you celebrate your win. Okay, make sure you celebrate make sure you celebrate this. All right, so have a good day. Bye bye.